Cool. What up, everyone? Welcome back to Financial Education and Business. Today, we're going to be covering cybersecurity companies, and I kind of started with Grok and I went from there. So, obviously, with AI and everything else that's going on in the world, I think we've come to the conclusion that AI is going to be important from now on. It's really not going anywhere, and it's going to continue to eat up. It's going to continue just to expand and become a very important part of every single country's GDP. And so I think it might be a good idea to start looking at companies in the cybersecurity world. As AI becomes proliferated across the world, obviously we're going to have bad actors, hackers that become more efficient and more capable in what they can do. And especially with AI, the hackers are going to be so much better at what they do. So practically, this video is going to be about cybersecurity stocks and how I kind of started my research and what I was able to put together. So I kind of just asked it, I asked Grok, hey, let's focus on cybersecurity, the importance of cybersecurity, and the types of cybersecurity. Kind of broke it down into a couple of phases here: threat value, and velocity, adaptive and evolving threats, automated and response, predictive defense, offensive AI, and then it broke down types of cybersecurity. So obviously there's a whole bunch of them out here. You got network security, endpoint security, cloud security, application level security, identity and access management, data security, threat intelligence and hunting, security operations. AI specific cybersecurity challenges are around adversarial AI, model theft, deep fake social engagement, and AI hallucination in SOC. And then did a future AI native security, like autonomous SOCs, zero trust plus AI, continuum resistance AI, quantum resistant AIs. I don't know how, we're probably pretty far away from quantum, but kind of covers that as well, that quantum is going to definitely can break passwords and security levels. And how do these security companies stay up with quantum development? And then I told Grok to, hey, what she said, some things are like EDR, EUBA. And she kind of broke down what those are. EDR, endpoint detection and response, monitoring every device, laptop, mobile service in real time, goes beyond antivirus, detecting fileless attacks, ransomware behavior, and alternate movements, lateral movements, and then the UEBA, user and entity behavior analysis, to build a normal behavior baseline for users, devices, and apps. So if the phone is doing something that a user doesn't normally do, it may try to create some kind of defense around that, like this is not normal for this person. For example, a large financial institution out of nowhere at 2 a.m. does something out of the ordinary, that automatically gets flagged. Why AI augmented EDR, endpoint user and user and entity behavior analysis first. Well, highest ROI endpoint are the number one attack surface. 97% of breaches involve devices. Immediate threat visibility, so detect 0-day insider threat, living off the land attacks that firewall miss, reduce alerts, fatigue. AI filters 99% of the noise. Anal- anal- analyst analysts focus on real threat. Foundation for everything else, behavior data for feed into SOAR cloud. And then obviously talks about tools and why they matter. CrowdStrike Falcon, they have best-in-class ML behavioral detection. Microsoft Defense for endpoint, meaning like your laptop and so on. And Sentinel-1, Singularity Autonomous Response, Auto Skill Renew ransomware. And then I kind of went on from here, kind of breaks down of like how cybersecurity works. And then I said, okay, I'm interested in some of these publicly traded companies that are focused in cybersecurity, publicly traded companies excel in AI augmented cybersecurity, considering the EDR and EUB scaling to SOAR, and the AI, came up with, or Grok came up with some suggestions like CrowdStrike, Palo Alto Networks, Sentinel-1, Fortnite, Zscaler, Octo, Microsoft, Qualys. I never heard this company. AI model speed detection 70%, 22% growth. The Zscaler #1 strong buyers. So obviously it listed a decent amount of companies, but it gave me one ETF that is specifically in the cybersecurity focused. And so what I did was I continued this, and I said, you know what? I want what are the other ETFs that are out there specifically focused on cybersecurity, because I want a holistic view of all the cybersecurity companies that are out there. And so it gave me a list here, and then from each list, each ETF that I was provided, I was able to capture all of the how do you say, number of all of the cybersecurity companies listed within each ETF. And then I told it, hey, make sure you're not missing any additional cybersecurity companies, and provide anyone that you have not provided yet. And it gave me 2 additional ones. So what I did with that data is, I went and got those cybersecurity companies, the ETFs, and I broke them down into a useful table here. So all the lists that Grok was able to provide, so this as well as all these cybersecurities, I took, for example, I'll copy this one and show you what I did here. Sure, not FinViz. ETF. So what I did is, for any single cybersecurity company, I took the entire list of their holdings, and then I put it in the Excel tracker. But I did this for every single cybersecurity that they had. So I've every single ETF here. So I took ticker symbols, and I was able to, what's going on? Stop. I took every single ETF, broke it down into individual stocks, and I was able to get the information that I want. For example, obviously some of these are missing, so I went and got the stock ticker symbol. Let me just do it this way. I got the stock's ticker symbol, I got the market cap, I got the price, I got the day percent dollar change value, I got the change in dollar value, change in percent, change in the past 30 days or so, So I can change this myself. So if I change this to 15, then that means all of these changes are looking at the last 15 days of percentage change. I used conditional formatting to make it so that not the right selection, but red items are red and the green items I do not have yet. Green. Let me see if it will do this. Nope. Green. Nope. Yeah, that's the wrong selection. All right. So practically the goal here is that anything that's negative will be highlighted in red. That those that performed well, as you can see, they will be in green. And this is a percent change. And then there's this chart that you can change the numbers for. So I'm like, I want to see how well the stock did, for example. These are all cybersecurity companies, obviously. I was able to get each stock, the market cap of the stock, so I can search by size and decide, I want to invest this. This is a large company, I would like to hold them. So what I do is, so I got the price, I got the percentage change, and then I got the 15-day change. Then I can change this number as I want, and then I have the chart that changes based on the number of days I want to look at. So if I want one of the cybersecurity companies, like I want to see the past 100 days of the stock price movement, all I have to do is change this, and this is a chart of the company and how well they did. And so if I wanted to see, okay, this company here, percentage change today, it was hit by 16%. As you can see, the bar chart just kind of goes down and showing that yes, it is working. This company had a good 3% day, and I can look at, let's say I can look at the last 5 days, and we can see here's that hit, the price goes down 3 days, where the stock price has gone up 3%. So 1, 2, 3, 4. So 1, 2, 3, 4, 5 days. 1, 2, 3, 4, 5 days in total. So this is a cool way. So I kind of just quickly created this because, I mean, if cybersecurity is going to be an important part of our industry, I think it's probably worth looking at some companies to invest in. Maybe this might be a good start here, and so I'm probably going to go from here and dig into each company and see which one is worth looking at and understanding versus which ones aren't at all. Obviously, I want to invest in the one that's going to make the best return, but who knows which one's going to be cybersecurity company. But if you have one, make sure you leave it in the comments, because I would love to take a look at some of them. This should have almost all of them, because I used Grok, and I said, Grok, give me all the cybersecurity ETFs that you can find. So I got all the ETFs, and I searched each ETF and took the holding, and I just copied it. So, and then I was able to get all the data that I need. So I kind of want to look at, ETFs, let's say performance in the past, let's say past 90 days, right? I want to see some of these stocks, how well they're doing, if they're getting beat up, or if they're, if they are resilient. So obviously I want to look at, maybe the most beat down ones, and maybe go from there. So as we can see here, there's this company, it's called Commvault Systems. They definitely are getting beat up. Looks like in the last day, they're down about 16%. And then in the last 90 days, they're down 24%. So, you never know, what's going on, why these these cybersecurity companies are getting beat up. But like Rubrik, definitely a growth company. There's a lot of insider sales going on. Fortnite is pretty good as well. Okta, really good and integrated in a lot of companies. Alarm.com, they work with a lot of companies, specifically like apartments and just, you know, with those like security locks that apartments have that you can unlock using your phone. And so there's a list of them here. And so, but before making any of these decisions, I'm going to play some videos we can watch around the importance of cybersecurity companies and how they're going to impact the world of AI.
And artificial intelligence has been reshaping industries, but it's also widening the gap for cyber threats. While 80% of companies have already adopted AI, only 6% of them have a security strategy to protect it. That's according to Sandbox AQ. And now, at one of the world's largest tech events, GITEX, we have our next guest to discuss why the region has a once-in-a-generation opportunity to shift from being a consumer of AI to a creator of transformative IP. Very pleased to welcome back to Access Middle East, Jack Hidary. He's the CEO of Sandbox AQ, which is, of course, backed by NVIDIA. Thank you very much. Jack, welcome to the program. Great to have you with us. Of course, joining us from the GITEX conference in Dubai. First of all, I know it's still early morning, but you've been on the ground for a couple of days now. What's the energy like this year, and how does the conversation around AI here compare to what you're hearing in the US and Europe right now?
Well, Dan, very good to see you. We're live here from the floor of GITEX in Dubai. More than 200,000 people will be visiting this week, this conference. So a lot of good energy the last 2 days, but also concern. As you just mentioned in your opening notes, AI is transforming lots of industries, but also creating a bigger attack surface for cyber hackers. And so while AI does help in many areas, it also exposes vulnerabilities in the companies using it. As you mentioned in our Sandbox AQ survey, wide adoption of AI, more than 80% of large enterprises now have adopted it. But it's also the #1 concern of more than 75% of CISOs and security leaders, the concern about how do they secure the use of AI and also defend against AI attacks. So this is a big concern. We're actually sitting in a part of GITEX now with many of the cyber companies around, and it's definitely on people's minds as they look to the future.
Absolutely. It's one of the big themes at GITEX this year. AI and cybersecurity, of course, very closely correlated. Let me take you back to something you just said. Jack, you said AI creates a much bigger attack surface for companies. Explain to me what that means in layman terms, and can you give me a real-world example?
Sure. So in the days before AI, we knew about an attack called SQL injection. And what that means is if you're accessing a database in a big company, and maybe you have access to it from a website so that you can look up information, you can inject hacking information into the database by putting something in that search box. Well, now fast forward to the prompt box that we're all familiar with the large language models, and we now have a new attack called a prompt injection. And so an attacker can use that prompt box that we're all familiar with and put nefarious malware through that prompt box into the large language model. That's one kind of attack. A second kind of attack exposes the information of the company to others. And so if you don't have the right guardrails around the use of AI in your company, if you're using an AI that, say, is using that data for training for everyone else to use, that means your proprietary info, your trade secrets in your company will now be accessible by the entire world. That was a real-world case, Dan, in the case of Samsung, where early on, when we say early, we mean a year and a half ago, 2 years ago, Samsung engineers put some information in as a prompt, but it revealed some proprietary information from the company. And so security leaders across the Global 1000 are really concerned about these kinds of attacks. AI, very helpful tool, but exposing new vulnerabilities in large companies.
Right, so what can the C-suite do? What can executives within the technology and AI space actually do to ensure that large firms, big companies are protected from some of these vulnerabilities?
Well, the thing to do is, one, to make sure that if you're using one of the paid-for models, be it OpenAI or Google Gemini or Anthropic, that you make sure you have the enterprise edition that cordons off your information away from the training data set. Number two, another way to go, for example, Bank of America and others decided to use an open source version of large language models, download it locally, and run it locally in their own data centers to ensure that they had a good firewall around that. So there's different approaches, but the key is that only 6% of large enterprises even have a plan, Dan, as to how they're going to protect themselves from these new vulnerabilities. What we're also seeing, Dan, at GITEX is an increased focus on NVIDIA, on other chip manufacturers, and how they're transforming what will be the next wave of AI.
Indeed. So, look, let's take a step back and also talk about what we're seeing in the Middle East right now as well, because, Jack, I know you follow this really closely, as I do as well. Over the last couple of years, we've seen this region attract some really serious investment into the AI infrastructure layer in particular, with the likes of NVIDIA, as you mentioned, AMD as well, all backed by sovereign capital too. So what's your pulse check on the region right now? How do you see this region reshaping global compute capacity? And are you seeing anything that's giving you perhaps pause for thought or maybe even concern?
Well, I think that let's first look at the physical infrastructure. You're seeing a huge amount, billions of dollars being invested by G42 here in the UAE, by Humane, which is a new AI organization in Saudi. We're seeing these organizations put billions of dollars into the infrastructure. So that's happening at a really good pace. What I think is an opportunity, a big one here in the Gulf region specifically, is on the data layer. When you look at large language models, of course, the data is the World Wide Web. Recently, Tim Berners-Lee, the creator of the web, came out with his book, This is for Everyone, and we use that for large language models as the training set. But there's a key opportunity that I think is before us here in the Middle East, here in the Gulf region, and that is to focus on applications in creating new biotech assets, new chemistry, new materials, new kinds of batteries. This region is very intense in terms of its energy usage and energy production. And they need a new kind of AI that is not just large language models, but now what you see being adopted in the Gulf is large quantitative models to take hydrocarbons, for example, make new kinds of products from it. When we look at biotech, we look at 400 million people in this region, key health challenges. And so using AI to develop new therapeutics, new diagnostics, that means we've got to go beyond the World Wide Web, and we've got to create new data sets that really address those kinds of issues. Going from a resource-intense economy to an IP-focused economy is one of the key things that you see the governments here focused on.
All right, if you're still here, make sure you subscribe. I'm just gonna be talking about all about cybersecurity companies, specifically stocks that we can maybe invest in. Great financials, great leadership. So yeah, if you're enjoying this, make sure you subscribe. I'm going to be continuing this for probably a while. So if you have any questions, make sure you leave in the comments.
Indeed, Jack, and the region really trying to build proprietary compute and data algorithms here in the Gulf. But, I speak to executives in this space. One of the key concerns I continue to hear is that while there's deep pools of public and private capital to facilitate all of this, they don't necessarily have the talent on the ground in order to execute it. Is the talent gap still an issue in this part of the world?
Well, I think it's a big opportunity. When you look at what's happening in the UAE, in Bahrain, in Saudi, in Kuwait, in other countries, there's an increased focus on where will the talent come from. For more than 10 years now, there's been NYU in Abu Dhabi as an example. There's KAUST in Saudi. There's other organizations. Also in UAE's MBZ UAI, which is a dedicated university just for AI. So there's definitely been an increased focus the last 4 or 5 years on this issue. I do think that we're going to have to see more partnerships with international organizations, international universities, and the governments here. So I think we're just seeing the beginning of that, because there's definitely going to be a need for more and more talent. not just in terms of AI engineers, not just coders, but also what we call bilinguals, Dan. A bilingual, for example, is somebody who knows medicine, knows biology, and knows AI. Somebody who knows chemistry and energy and knows AI. We call those folks bilinguals, and they're very rare. They're like unicorns, but we're going to need more and more of them here in the Gulf region to transform the key industries. And finally, I would say there's a strong desire here in the Gulf to diversify the economies. Energy is a strong component, always will be, but looking for biotech specifically, looking for new areas to expand the opportunities here in the Gulf, that will require new kinds of talent.
So, Jack, just on that point, what would you say is the biggest headwind or the biggest challenge for this region right now when it comes to these AI ambitions that you're outlining?
Well, I would say that the region is making really strong progress to make partnerships and ties. Every few weeks, we see another partnership of an entity here in the Gulf with one of the global entities. It might be Microsoft, it might be Google, it might be NVIDIA, AMD, and many others. So we're seeing more and more of those partnerships. That's going to be a key way to accelerate the development here in the Gulf. We also want to see more IP owned in the Gulf. That's one of the key challenges, I would say. Right now, 90+% of the IP in the AI space is being created in only 4 countries in the world. We want to see that expand, and I think the Gulf region can be one of those key regions that not only uses IP from the rest of the world, but also is creating that IP here. I think that's one of the key opportunities right now.
Jack, I wish we had more time, but we'll have to leave it there. Really appreciate the conversation. Thanks so much for joining us live on the ground at GITEX this.
Cool. So they're obviously talking about, cybersecurity company and the importance of them. I'm going to try to capture the entire list of cybersecurity companies that are out there. And if you are interested, definitely let me know. I don't mind sharing the workbook with you. If the company is publicly traded, give me the ticker symbol. If you know of a ticker symbol that company that's in cybersecurity, definitely let me know. I am very interested. It looks like a lot of this is Microsoft, Octo. Splunk was acquired by Cisco in 2024, no longer. Don't leave out any company. If they are private, just tell me. However, provide all 26. But if you don't use AI, I think you might be missing out. But I use AI for a lot of my research to get a lot of this information, at least as much of it, was Splunk. Now, was SPLK acquired by Cisco. But this is normally how I kind of like group and find what I'm looking for. Start my research to find the best company out there to kind of invest in. There's a chance that I might have this list already in my workbook, but the goal is to have all the companies that I want, that I would like to invest in, and then go from there. Okay, it's too much information. If you have a ticker symbol, totally let me know. Okay. Only give me the ticker symbol. I think I have most of them. I don't know. Does that say Amazon? Snowflake? A lot of times, duplicate. If you don't know, formulas, definitely it's a good idea. Control space selects a whole column. Alt backslash gives you the shortcut, and then you can say conditional formatting, and then you could say duplicates. Oh, it doesn't have duplicates. That's fine. There's no duplicates formula in Sheets unless you know of one, but I can't find any. Okay, these are all my companies. I'm gonna add a filter, remove the filter, and then add filter on them. The cool part is once you have your formula, getting everything you need is really easy. I have my ticker symbol, I have my formulas. All I have to do is go over, copy everything, and then go down. I should have all the data that I want. Amazon Web Services, I guess. Confluent, I don't know. CrowdStrike, I already have. Datadog, Microsoft, Octo, I already have. So a lot of these companies I do have already. So I could kind of group the alike ones together, remove anything that's kind of duplicate. I'm sure there's a formula. I just can't think of it right now that would remove duplicate items. Like Splunk. I'm really interested in Splunk, but I don't like how the insider sales are going on. There's too many insider sales. Whoa. Okay, that was weird. Splunk. Whoop. Splunk. So I was looking at. Isn't it Splunk? Where'd I go wrong? Rubrik, my bad, not Splunk. I meant in Rubrik. I'm really interested in Rubrik, but the problem is there's too many insiders, directors, financial director level C-suites are selling too many shares. So here is the insider sale data on the company, and as you can see, there's since March, there's no insider buys. The officers, the directors, the CTOs are all selling. As you can see, last December, $89 million. June, another $92 million. 17 trades worth $92 million. And then 10 trades at $89 million. It doesn't seem like they're slowing down. I mean, maybe a little bit, just because these months are quite high versus these months. They're slowing down in sale, but like, where are the buys? If there was a buy, it would be in green somewhere in here, but I don't see it. So the fact that the insiders are just kind of dumping the stock definitely isn't a good sign. But on top of that, the stock is definitely getting hit. As you can see during the day, it had a decent pop, but then overall, the stock is in somewhat of a downtrend. Some might say this might be a good buy due to technicals. Maybe it looks like it's starting to hit this like support, getting closer to this like support line. But I'm not good at technicals. But I'm much better at fundamental analysis. But overall, the company has seen like significant growth. I mean, 2025, look at this company. As of 2024, like around the end of the year, 2024, this is a $35 company that is now at $75. So they've done really good. But if this company comes down to 71, I'm starting to maybe buy them. I like what they do. I like their business model, subscription-based business model, cybersecurity, cyber resilience field, meaning if companies, their system goes down, they're able to or the system get hacked, they're able to help the company continue operations because most of the data is backed up in a server somewhere in the clouds. So not a bad company to look at. Rubrik, not a bad company, but I'm just waiting to see what's gonna happen to them. Octo, I've looked at this company. I haven't touched them at all. But overall, let's look at the last 90 days of the stock performance. Octo here, kind of chilling, as you can see, not really doing much, just kind of chilling for the past 90 days. That's about 3 months. Who do we have? Octo. Is there any other repetitive repetitive companies here. Let me know if I missed one. We got CrowdStrike. Obviously, CrowdStrike is having a good year. I think today NVIDIA gave them a good boost. They Juan, whatever the CEO name is, he called them out and talked about how important they are in the world of AI. And the fact that they have that partnership with NVIDIA, it is so important. Winners always win. And, second place wins, but not as much as the first place. So, I mean, we see NVIDIA at number one. They're never going to be number two. In what they do, providing chips, robotics data, and everything else. So finding the number one AI cybersecurity company will be the best thing to do here, is because winners win. And historically, that's what we see. Apple continues to win because they produce some of the best phones and people already use them. So that is my theory anyways. Winners continue to win. Datadog, not a bad company. The stock has been hammered. Is it no Datadog here? The stock has been actually doing really well the past 30 days. Let's look at 90 days. So we have both stock performance and the stock chart here. Datadog, it says about 5% for the past 90 days, but if we're looking at from these lows, it's probably doing much better. That's about halfway from these lows. Datadog, you can see a lot of these cybersecurity companies are all on uptrend, especially this guy here with Cisco. Cisco has been around for a long time. Winners always win, but I think they could be replaced by some of the newer AI, some of the newer companies that are out there. So I could definitely see that happening. And then next, let me just make this a little larger. But yeah, if you have any companies, ticker symbols, let me know. I'll definitely check them out. Who do we have here? We have Booz Allen, Hamilton Holding. I almost said Alien. So that's down about 20%. I don't even know. I mean, I'm sure they're probably in cybersecurity. Amazon, they have Amazon Web Services. Definitely Amazon is going to be a big player there. And then now let's look at the companies that are beat up here the most. So the one that's beat up the most in the past 90 days is CYCU. So Cycurian. Is that it? Cycurian or Cycurian? So I guess it looks like they're getting beat up. They're quite a small company. I think they're at about $8 billion, depending what market cap, what website you're looking at. I have here 11 as per Google Finance. The next company that's beat up is Commvault Systems. With a name like that, I think you might get beat up a little bit. Rubrik is the one that I'm interested in, but it's beat up at 20% here. We got Science Application International. They're also all these are kind of getting beat up. Fortinet or Fortnite getting beat up. Cloudflare in the past 90 days, they're down 10%. Maybe this is an opportunity to pick up some of that stock. How are they looking? Confluent Inc. Is there any insider buys? Jeez, look at this company. Nobody's buying it. Insiders are just selling this stock. The selling has slowed down. The volume was insane in November. And that is around when the stock price was quite significantly high. So that's interesting. But I usually don't like to buy into companies where we see, since December 2024, everybody's just selling out of the stock. So that doesn't give me good confidence. of
All right, so
what the company is trying to do. But let's continue. I'm going to show another video. Bad news is good news, and good news is good news for cybersecurity sector. Obviously, with AI, there's no way this industry is going to slow down. New companies are going to be forming around here, and so I would like to buy like a small, not a startup, but like a smaller company that has a great idea and is starting to pick up some pace, get some customers, growing, and has really good management. So, but I'll search for that while we watch this video.
We really learn about this. Again, last year, I believe it was July last year, we saw the CrowdStrike outage. This time it's AWS. How fragile are our internet systems and how interdependent are they in your view?
Yeah. The fragility, I think when there's outages like this, I think it highlights the necessary space that, or the necessary utility that cybersecurity provides to these massive players. What we've seen, not only with the CrowdStrike outage, but also other incidents that have occurred over time, is it ends up shining a light on the space. And if an outage for one doesn't necessarily mean bad news for everybody else, it tends to raise the tide, highlight awareness, and really, I think, shine a light on the space. It's kind of the case where bad news is good news and good news is good news.
All right, I mean, it sounds like a pretty good scenario where you win either way. We're looking at the CrowdStrike outage from last year. It was about a $5 billion price tag put on that for Fortune 500 companies. I actually want to look at the other side of this. What do you see as the potential impact for Amazon and AWS? Could this be an inflection point where AWS sees a lot of customers leave and go to Google Cloud or Azure?
In the cloud space, it's becoming a very sticky source of revenue, for those cloud providers. It's expensive to move everything over from one network to another. So it remains to be seen, whether this ends up, costing AWS significantly. But what we see, not just on the cloud, but also the data protecting that, these type of IT contracts, these are very sticky revenue sources. And so it remains to be seen whether this is bad news for them.
All right. You say it's kind of good news on both sides of it. Could this potentially, this situation, even though it was not a cybersecurity incident, I want to make that clear, could it be good for cyber players and just kind of remind a lot of these companies that they need to really reinforce their systems, whether it's from a problem internally or externally?
Absolutely, yeah, and I think what we're seeing across the cybersecurity space is it's not just about protecting, our country's borders from digital threats, but also internally, whether those are outages or even perceived threats in this case.
All right, so you hit on some of the stocks that are doing very well in the hack ETF that you manage. One of them, CyberArk. Now, of course, CyberArk's being acquired by Palo Alto Networks. So does that kind of change the landscape and make really Palo Alto Networks? A lot of people call it a blue chip cyber company, but does that just increase its market presence and I guess necessity when it comes to cybersecurity?
Absolutely, yeah. And if you like CyberArk as a standalone, and we have CyberArk and Palo Alto in our portfolio, we like the combination of those two. And I think part of that combination is really integration, not just from front-end protection from a cybersecurity perspective, the defender at the gate, so to speak, but really integration across an entire company's tech stack and workflow, all the way up into the cloud, AI, and really the things that are driving a lot of the market today.
All right, Nate, I really appreciate the fact that you're a positive thinker. You're saying everybody could win in this scenario, but generally somebody is a loser. Are you sure it's not Amazon potentially losing market shares, or potentially another company that could be impacted by this outage or see their operations or business impacted in some way?
Yeah, there are players in the cybersecurity space that are perhaps less focused. It's hard to be a jack of all trades and good at all of them. And so, what we look at in our portfolio are really companies that are going to be focused on a high level of cybersecurity. We want companies with a high level of cybersecurity revenue purity is how we think about it. And so there are companies, Infosys, for example, they're a player in the cybersecurity space. Their stock is down year to date. And I think, that may be the case where they're spread a little too thin, not focused on necessarily being really, really good at one thing, like your CyberArks, CrowdStrikes, Palo Alto Networks.
So I just want to get your take on some of these deals, just the massive size of them, the energy demands, the numbers. I mean, what is this? Just how do you view it as somebody in the tech space that I would imagine you have dealings with at least some of these companies?
Yeah, well, I mean, the war's on, right? And the war is for power, it's for compute, and it's for eyeballs, and it's for value. And you're seeing app stores show up. How do you provide more value? The war for compute, and fundamentally behind that is power consumption. But it is a very exciting time. Everything is being rethought relative to technology and its delivery.
All right. Any concerns that all this spending may not be as profitable? We just heard, actually, Gilbert Garcia was just here talking to us about the profitability of all this spending. Not that it won't work at all, but it may not be as profitable as believed to justify this level of CapEx spending.
Well, you can't have winners without losers. So obviously, I think there will be some very disappointed investors in this journey. I think there'll be some highly rewarded
But which
ones.
area? Is it chips? Because the chips have gone just too far, too fast. Is it software? Does AI basically reduce the need for software? Is it cybersecurity?
Yeah.
That it hasn't seemed to catch up with the rest of the AI trade.
I definitely think software is being rethought. So I think some of the big names have to either really innovate or die. So I think that'll be very interesting. Cybersecurity, the needs are greater than ever. So I think that is a little immune to the path that we'll have to innovate. I think the bigger issue is going to be who can really win at the consumer level, and that's where the battle's playing out. You see all of these attempts to unseat Google for control of those eyeballs. And I think the winners and losers of that are going to determine that outcome.
Well, you're speaking to that OpenAI news. So is that innovation, the fact that you're going to be able to go on ChatGPT and pick out a Spotify playlist, is that the innovation you're talking about? Or you might be able to go on to ChatGPT and say, hey, I need a shower curtain, and it goes to Target.
Yeah, I don't think the innovation that we're seeing now is representative of where this can go.
Well, where does it need to go then? Because if you're saying that's not that big of a deal, investors seem to like it for the most part. Figma jumped,
Yeah.
and all the stocks jumped. We're kind of seeing some differential in movements right now. But what's the innovation that you think needs to happen?
I think the innovation we'll see on the consumer side will be about progressively preparing your day, your experience. The way you browse today is very much controlled by you, and now you'd have an AI co-pilot with you, an AI partner in that journey. So as we think about looking where we want to travel, our preferences are built into that decision-making process. The automation to make it a simple flow, that is very real and will happen. It's not here today, but it will happen. And owning these platforms is how these companies want to do that. On the enterprise side, it's a much clearer path. It is about automation. It is about the reduction. It is about ROI. And I think that is a very firm area. The consumer side, though, is a battle for preference. And you have to win the end user's ideal of what they want to use first before you can deliver that value.
So you're talking a lot about the consumer side, but what about enterprise AI?
Yeah.
Are you worried about that disrupting your business? You have a secure browser.
Yeah.
Cybersecurity, you're at least cybersecurity adjacent. I think that's fair to say.
Yeah.
Are you worried that a large enterprise like a Salesforce may integrate either its own AI chatbot or another one, and it will reduce the need for a secure browser?
So no, for us, it's a big boom to what we're doing. And the way we did is we made an AI portal so we can integrate into all of these functions. So right now what's happening, a big enterprise, banks, healthcares, they want to embrace as much AI as possible, but the security concerns, the data leakage concerns, and the non-deterministic behavior of the algorithms themselves all create for a difficult environment for rapid adoption. We try to open that up. So we built our own agentic browser into it. We've got our own AI platforms, but more importantly, we integrate to all these great innovative companies, and we bring them into the enterprise.
So with that said, can I put you on the spot?
Please.
I would imagine that your company's as agnostic to which one of these browsers and chatbots, but which one do you think is the best for enterprise right now?
The best for enterprise right now, it is hard to not support Microsoft, given they started with that concept. Most of the other AI players started on the consumer side and are now saying, look at what we can do in the enterprise. So Microsoft has a lead in the understanding of the enterprise, but if you look at a ChatGPT and some of the other ones like Perplexity coming up, the tech is really good. So it'll be interesting to see that play out. But for the moment, enterprise Salesforce, enterprise access, enterprise contracts, Microsoft's in a good spot.
Well, I have to say, winners continue to win. So I don't see why a company like Microsoft, a company like Google, Amazon Web Services, I don't see why those companies won't continue to win. Especially like everything about Google. I don't think Google is just gonna stop winning, just because I think they are definitely working on quantum. So if there's anything they need to adjust their security for, they're able to train that on quantum. So I think they're gonna always be a company that is, hundreds and hundreds of miles ahead of a whole bunch of other companies. So I don't know. I think that a company like Google, Amazon, that they are these like tech giants, definitely are not going to go anywhere. So they are definitely a wow, my phone my phone just went off because I said Google. That's crazy. But yeah, a company like Google is definitely not going to go anywhere because they already have a whole bunch of cyber. They already understand. They already have quantum. They do quantum research. They have the money, the budget to do all that kind of stuff. So from a cybersecurity perspective, like a lot of these companies have to prepare for quantum. Like obviously we're not in the age of quantum, but in the next maybe 10 years we'll be there. But Google is one of the only, and IBM are one of the only two companies that can really stay ahead of that because they know how quantum could disturb their operations. So they're at the AI front. They're on I think, the future of cybersecurity as well. So yes, you have all these like cybersecurity companies that are focused only on that. But I think at the end of the day, the true winners, like the winners are going to continue to win, especially a company like Google and Amazon. I can see them making a play in that industry probably in the future. So let's keep going. So I have been working on this. Trying to get all of the quantum companies into a single workbook, worksheet. What do you name this in Google spreadsheet? It's not, is it a workbook? So all of them into this single workbook. And so once I have it, I can totally share it. Just go ahead and request it. Let me know in the comment section. I may just share it with you. There's a lot of useful information here. You can see the market cap, the ticker symbol, the price, the day dollar change, the percent change for the day, and then you can see the chart as well. And these values are all items that you can change to adjust it, so you can see the data as you wish. So the 90-day or 30-day percentage change, you just put in the number, and all this would update, so you can have a good perspective. So let's go on.
All right. In your top 10 risks for global businesses right now, you're saying geopolitical volatility, that's cracked the top 10 for the first time. But I want to get to number 4, regulatory and legislative changes. Is this shutdown, does that fit under that basket?
I think what you have to look at is that this is one of a series of things. You just saw a reshuffle in the UK that replaced the entire cabinet. You saw a new government in France. Now you're seeing a potential shutdown in the US. The shutdown in the US isn't going to change the way we operate on a day-to-day basis, and it's not as much of an upheaval in our government. But the point is, it's a series of government instabilities that can also drive other issues, supply chain, commodity pricing. A lot of these top 10 risks in the report that will be issued this week, they are either involved directly with government, legislative change, regulatory change, geopolitical risk, or they have a lot of dependence on government action, in commodity pricing, as I said, supply chain risk. So what you're seeing is an increase in risk generally. And companies need to be able to respond. I mean, this isn't slow pitch. You're not going to have time to recover after one of these risks comes to bear.
All right. I also want to amend what I said, potential shutdown. Even though the rhetoric's ramping up and it seems like we're on pace, it's still potential. We're counting down, hoping to avoid it. I think everybody's actually hoping to avoid it. Agreed. Now, an interesting statistic from you, only 14% of companies, they actually, you're saying only 14% of them track their exposure to these risks. What does that mean for practical business purposes? Does that mean, you mentioned supply chain risks, does that mean they don't have redundancies in the supply chain? Another issue here is cybersecurity and data breaches. Does that mean they don't have adequate cybersecurity protection? What does that mean in the real world for these companies?
This study is 3,000 business leaders across the world. Every single sector is represented, 62 countries. And when we asked them their greatest risks, these top 10 came to the fore. But you're exactly right. What it means is supply chain's a perfect example. So, in the financial crisis, we got a debt shock. We responded accordingly. In COVID, we got a supply chain shock. And what this is companies aren't looking at their second and third tier suppliers. In and around the pandemic, Aon came out with the supply chain risk analyzer. What it allowed you to do is, who do I get my goods and materials from now? Who do they get their things from? And what is their supply chain subject to? Is it geopolitical risk? Is it supply chain risk? And so they're not looking down the road at these issues. And in some ways, they're going in with a blind spot into these risks.
All right. Your number one risk for global businesses is a cyber attack or data breach. I got to be honest, I hadn't seen a lot of headlines about cyber attacks. Then I just happened to Google it, and I saw that Jaguar is facing an issue with a cyber attack that according to the article, at least, flash is a possible alarming sign for other manufacturing companies. When we're talking about cyber risk, what industries are most exposed? What industries are seeing the highest risk of this being a major issue?
Unfortunately, that answer is yes, and. This cuts across the board. You see ransomware attacks, even on, they went after a preschool in the UK. This cuts across every aspect of the economy. AI can be a defense. Companies are using AI to better defend themselves, but AI is becoming more sophisticated from a cyber risk perspective. This is something we see with all of our clients, like digging into not just how your employees use your software, but how you're vulnerable to outsiders. And this is an issue where people are not spending enough time understanding those second and third degree risks.
All right. The article highlights manufacturing. In your mind, is there one sector that's especially exposed? Is it manufacturing, or do you see another sector or part of the markets of the economy especially at risk?
I think financial services and anyone that relies on a network is extremely at risk, because you are only able to survive when you are able to communicate in a complex global network. And so, I think that we're all exposed in a different way, and we're learning this the hard way.
There's no one who knows more.
I totally agree. 5 days ago, don't buy idea AI will kill software. Don't buy idea AI will kill software. Needed to be protect AI. Looks like that CrowdStrike joins the Squawk on the street to discuss the latest AWS outage. I think there is a lot of dependency for the United States, especially not just the United States, other countries, depending on Amazon Web Services. When Amazon Web Services went out, it was crazy. Like, a lot of companies, it's the same thing with CrowdStrike, Palo Alto. Like, it's really not good for the United States and other countries to depend on our millions of apps to depend on a single Amazon Web Services product. I think there needs to be some kind of diversification, and they can't just depend on one. When Amazon Web Services went down, literally it felt like everything was down. Investors couldn't get into their stock market to see how they're performing. Flights had to be canceled. Companies had to be shut down for the day. That's a problem. So this is going to create some opportunities, obviously, in the marketplace for investors to make some returns. As we've seen a pretty good example in the past 2 years, where Amazon and Amazon Web Services, and there's another company that went down and really impacted a lot of companies. So let's see what CrowdStrike CEO is going to say here with the Quack.
Then George Kurtz, who is CEO of CrowdStrike, and I can't believe we are lucky to have you. George, it's great to see you, first of all, and you're doing a lot of terrific stuff, and I think you've become one of the great, maybe the great spokesperson for an industry which cannot be, which is front page everywhere, and yet sometimes you have an outage like AWS, but no one wants to know whether it was cyber attack.
Well, when you look at technology and you look at how interconnected everything is, these sort of events happen. I think they did a good job of explaining what happened. They recovered from it, and they learned from it. They put out a very lengthy blog post. And when you have this level of automation and complexity, you have to deal with it. And part of everyone's goal is to become more resilient. And that means more resilience in cyberspace and more resilient from security type events as well.
Well, in there last night, there's Elon Musk, man we admire, who's talking about he needs to have more stock because he doesn't know what the Optimus robots will do. They could be hacked. Now, I know that you have a deal with Mark Benioff with Salesforce, but I'm starting to think that the agentics could I'm not to be like David Faber. I'm not going to, it's not going to be some movie, but that you could break into an agentic and then be able to get into the keys of the kingdom.
Well, this is something that we've really been focused on for the last number of years, is being able to protect agentic AI. And if you think about agentic AI, it has the capabilities to interact with data. It has the capabilities to interact with compute. It has identities, non-human identities, but it operates at superhuman speed. So all of the challenges that we've seen over the many years of humans getting themselves into trouble is only going to be exacerbated by agentic AI, and we need security like CrowdStrike is delivering to protect it.
When you hear a narrative start to develop that AI is going to kill software or is currently killing software, what's your pushback on that?
I don't really buy that. I think you need software in order to be able to protect AI, and they're interrelated. It's not like you just have one without the other. So for me, I don't really buy into that narrative. I think it's only going to help companies like ours. We're AI, but we're also obviously a SaaS company. And the way we deliver security and AI protection is through our software. So I think you have to have both.
That's been one of the biggest questions, specifically around SaaS, whether it's going to make SaaS obsolete and what SaaS companies need to do to integrate AI enough that they don't fall into that territory.
Well, you look at the big model creators now, all of that is going to be commoditized, and then it's really going to be focused on the apps itself. And all of the SaaS providers are leveraging AI and the foundational models and the frontier models that are out there to be able to create better applications and better outcomes for customers. So it's only going to accelerate SaaS, in my mind, once people get through the hype cycle of AI.
Do you think, George, that when you read, say, for instance, the Chinese bought no soybeans, do you think that's because they are listening to everything and they say, you know what, here's a killer, let's just not buy any soy? Or they won't sell, they want to limit rare earth. That's because maybe they heard that Hegseth said to somebody else, hey man, how's the F-35? Are we in trouble here, rare earth? They seem to know everything. They seem to be one step ahead. It's almost as if they've tapped everything.
Well, they kind of have, Jim. I mean, that's the scary part. If you look at geopolitical events, if you think about rare earth, how important they are, you think about issues with Taiwan, you think about anything happening in the geopolitical environment, they are there. They are targeting those companies. They are targeting other entities that are involved in those. And a big part of their operation is gathering as much intelligence information as they can. They've got their own big data apparatus. They take it all in, they synthesize it, and they know exactly what's happening before we can even react to it.
When you see, you know, we initially start out with the government taking a stake in Intel, and then we move from there to rare earths, and now there's talk potentially today about quantum computing stocks in the interest of national security. You guys have a lot of government contracts, right? DHS, DOD, et cetera. How do you think about that issue of government taking stakes in companies that are deemed to be of national security interests? I mean, cyber is obviously at the top of the list when you talk about companies that are protecting the national interest.
Well, if you look at the current administration, it's being run like a business, right? So when you look at taking stakes and having equity ownership, I mean, that's for other policy people to decide, but where the U.S. government spends its money once it gets the best return. So if there's a way to help some of these organizations and put quantum, you know, in the forefront, because we're going to have to deal with some of the issues related to quantum-related attacks, you know, so be it. But I think at the end of the day, we just want to be thoughtful about what we do, and cybersecurity, again, is going to be one that's going to be front and center for the government.
I caught my stepson spying on me in the shower at the same time that my husband used this trick to get hard.
Okay, that's a strange ad there. Obviously, CrowdStrike, it's one of the largest cybersecurity companies out there. It was nice getting his take on the industry and the type of security that the AI industry is going to need. I think the U.S., not just the U.S., I think cybersecurity is going to be almost as important as border security, to be honest. Because without cybersecurity, all these AI agents are going to be created, and companies and nations are going to be ruined just due to all these AI agents that nefarious actors are going to be able to make. And so countries are going to have to invest in companies that develop these type of products. So I think in the world of AI, cybersecurity is going to be even just as important, actually more important than the AI products that they're able to develop, because you have to be able to defend yourself, defend the countries, the government from getting breached. So the government has to invest into AI so they don't get hacked, because AI is going to know exactly how to hack a system as long as you give it the parameters, ask the right questions, and make your way into a government's website. And so I think AI security is going to be one of the most important things in the world of AI. So that's why I'm really starting to look into these companies, because I really do think it's more important than any AI development that you could do, more important than any border that you can create around your country, any weapon that you can create, because at the end of the day, AI can, using AI, you can hack anything or overwhelm a company's system by just sending a whole bunch of drone agents that go into your network and mess up everything. So having a security system that can defend against that, especially I'm right here, like I was just using Grok to go through and give me a list of things, and just writing a quick prompt, but I can easily say how to hack blah 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 and give me the code, and I can quickly make something. Imagine the people that have the knowledge for this kind of stuff. So they're going to be able to make something that can easily, bypass a lot of companies' information, especially governments. That government security is so bad just because naturally, there's so much bureaucracy there that just innovation isn't the fastest. So that's why I'm going through all these stocks, because I really do think the next industry is AI, cybersecurity, defense. I hope you enjoyed the video. If you are, make sure you subscribe. I was live yesterday. I'm going to continue to go live. I'm going to do stock research, company analysis live. So hopefully you get a notification next time as well. If you have a ticker symbol that you want me to take a look at, go ahead and put it in the comments. I love researching companies. So let's go on and see Steve Whitting, Chief Investment Strategy CIO Group, is talking about here. He says, I would stay long tech through areas like cybersecurity software.
For that and the rest of the playbook, let's bring in Stephen Whiting, CIO Group's Chief Investment Strategist, joining me here on set. It's good to have you. Welcome.
Thank you for having me.
All right. Why are you still long tech?
Well, how about earnings up double digits? It's been for the last few years. And when you take a look at next year's estimates, you can see expectations for revenue growth to continue, but to slow down. And I think the best analogy we have for this period, and none of them are perfect, the late 1990s period, remembering that 96, 97, 98, there were all sorts of warnings. This is over, the collapse is in, and we hear a lot of that again. I do think that we need to look at all these asset classes as a mature bull market. The S&P is trading at 27 times trailing earnings. But I think that the economy is actually poised to improve in the coming year. That's not going to get us necessarily the same types of returns that we have. Again, it's next year's earnings really will matter, and the year after that. But these parts of the economy are growing now at a very rapid pace, and I think the rest of the economy has got some room to improve and to catch up.
Yeah, and that's exactly where I want to go with you. What do you think drives that improvement in the economy? How much of this is AI infrastructure? How much of this is something else?
Well, a lot of the strength in AI infrastructure is sort of out on its own. 42% growth, the most rapid growth rate since the personal computer was invented. But the rest of the economy has been held back. Construction has contracted. Industrial production in the United States has grown only 1%. You haven't seen manufacturing employment increase since March. So, but you take a look at that and you see consumer spending has grown 3.5% as of mid-quarter 3Q when the data were turned off. So there's been a lot of business caution. You can see it in 9 out of 10 industries in the ISM report are really concerned about tariffs. So we've taken a lot of hits across the world economy this year. If we stabilize in terms of macro policies, including trade, we'll see in the coming year producers will raise output a little bit faster to the demand pace.
Cracks in the credit market scenario right now, you see that as an early indicator of something bigger, broader here?
Well, the longer we get into a recovery, the issues of easing credit standards will matter. As we just wrote in our CIO group outlook for 2026, we would not be investors in regional banks, we wouldn't be investors in the auto industry, right where you're seeing all of these issues. But let's bear in mind that a couple $2 billion of fraud is not exactly indicative of what's happened across the entire economy. I think that the worry that we've had about all of this, again, it very much tells you something about sentiment, that there are a lot of people who are still worried on the sidelines and thinking that it's all over. And that goes right back to repeating the pattern that we saw in the late 1990s before it became really excessive.
We have the Fed in a blackout period right now. There is a large, we'll say, as close to certain as you can get in the market right now, pricing in an expectation of another Fed cut here in the coming days, coming weeks. How much of this hinges on that actually happening? And perhaps just as importantly, because I don't know that we've been talking about it as much as we should, the slowdown in the runoff of the balance sheet for the Fed as well.
Sure. Well, a couple points on that. When the Fed is cut more than 100 basis points, it's usually not good for the economy markets, the conditions that drive it. Now, there have been some exceptions. Again, the mid-1990s is a pretty good example. Again, didn't quite get to 100 basis points. But the bottom line are just recalibrating a bit, focusing in on the labor market, which has slowed gains to a crawl, and looking at that very differently from corporate profits, where we're going to get a lot of beats, and we're expecting in the coming year more than 10% EPS growth. So I don't think it really depends on the Federal Reserve cutting if they had strong reason to. If all of the AI spending and the rest of the economy were going south, it would be a negative regardless of the cuts. Now, in terms of the balance sheet and that other question, I would just bear in mind that the Federal Reserve has done a better job than it did in 2019. It was borrowing and lending at the same time. It's cut its securities holdings by over $2 trillion. And it's, again, I think can really been a little bit lucky here that the economy is normalizing a lot of the noise. We've had higher inflation rate than we otherwise would, but it's going to come down some in the coming year.
Are you interested in mushrooms? Do you like drama? You'll love this.
Don't like drama. Don't like shrooms. No, thank you. Not interested. What is that?
Really
So
bullish call
they
from
were
Stevens,
talking
kind of
about.
implies
They were talking a little bit about the whole cybersecurity rates being cut and everything else. If anything, if rates are going to be cut, all I notice is that investment is going to go up. I don't know if it's investment going to be in cybersecurity. Maybe companies are going to start taking loans to continue to invest in their cybersecurity growth. Maybe that might happen, but I think I don't know how. Even if like rates go down, I don't think cybersecurity. The market as a whole is going to be impacted that much over the long term. Even if the whole talks about like tariffs, like if something like tariffs gets announced and one of these cybersecurity, I find a good cybersecurity company that I want to invest in, I'm gonna buy it. What does tariffs have anything to do with cybersecurity? Not much. This is like a critical part of it's a critical part of like the United States, most countries' business. So I doubt any kind of tariff related stuff is going to be a hindrance for this type of business. So I would definitely pick up some shares after I'm probably going to bring it down to 10 or maybe 5 of my top, and then go from there and pick my favorite one here. So I'm most likely going to pick the winner one. CrowdStrike's definitely up there. Rubrik is up there. Zscaler is up there. But see what they're talking about here. Cohen, cybersecurity demand keeps rising regardless of the trade disputes. Yeah, trade disputes should have nothing to do with the importance of cybersecurity.
30% upside move for the company going forward. Talk to us. What are you seeing when it comes to demand?
Yeah, I think what we're seeing is that the overall threat landscape continues to accelerate. It continues to get, frankly, worse. And organizations need to respond with an identity security strategy. And that's what we do. We offer the leading identity security platform to secure every identity, human and machine. And ultimately, as organizations grapple with this threat environment, they need to lock down controls on their various identities that they have throughout their organizations.
So Matt, you emphasize human and machine. We just kind of led into you talking about some of those new AI agents from Microsoft. You're somebody, I don't know if sounding the alarm is the right word, but or right phrase, but you're at least concerned about AI agents and generative AI when it comes to cybersecurity. What is your main concern?
Yeah, I think a lot of people talk about AI in the context of it getting in the hands of the adversaries, the nation states or the cyber criminals. And I think that does increase the threat vectors that are out there. And we also talk about AI from a data protection perspective, employees and individuals putting their data into these AI tools. But what we've been talking a lot about is what we call the rise of the AI agents. You heard that in that Microsoft piece that you were just talking about. So as agents come online, as organizations augment their workforce with digital identities, we call those agents, and those agents are autonomous. They can go off and do work on behalf of individuals, on behalf of organizations. They are machine identities that are acting like humans, and they have privileges and entitlements like humans to access data, infrastructure, and systems. And we can't just turn on those agents without making sure there's the right identity security controls in place. And again, that's one of the offerings that we offer here at CyberArk.
All right, so you're concerned a bit about AI agents. I also want to ask you about some of the trade disputes that we're seeing. BlackRock's Larry Fink coming out saying that some of these protectionist policies could lead to economic concerns around the globe, maybe even a slowdown. When it comes to digital trade, are you getting worried? I'm looking at your numbers right here for 2024. You're getting about half of your revenue from outside the U.S. Are you worried about some type of protection when it comes to digital trade for services like yours?
I think that at the heart of those type of decisions is really whether there's a strong need or not. And what we see in the cybersecurity space is that the demand environment, the need keeps increasing. And so our conversations with customers all around the globe is about how do we implement faster? How do we actually accelerate their cybersecurity landscapes? And I think the tariff conversation and the global trade conversation kind of sits at a different level than the immediate need that we can solve with our customers around the globe.
So Matt, can I ask you a kind of a tough question, if you don't mind? A lot of uncertainty out there when it comes to tariffs. A lot of companies holding off on making big decisions. Coming up, you have earnings in a few weeks. When you're giving your guidance, is it going to be cautious guidance? Or are you kind of concerned when you're given an outlook? I know you can't really give it right now, but is this a concern, just some of the uncertainty in the economy? And does it change your hiring practices? Does it change your willingness to give outlook? Does it change your willingness to even do interviews like this? Because I'm going to ask you some questions about demand and things like that.
Listen, I think when we look at what's happening out there, again, we see a demand environment that continues to be strong, that continues to say, we need to go implement the type of security controls that you can put in place here at CyberArk. And I think that sets the context for our conversations with you, with the markets always, is what are the conversations with customers, and are we seeing the ability to be able to continue to deliver the value they're expecting, and are they prioritizing our programs and projects? And I don't expect that to change even in this macro environment.
Welcome back to Morning Trade Live. Time to go inside out on cybersecurity. CrowdStrike, Palo Alto, Zscaler. Well, these names have soared. I mean, they're up about 25% over the last 12 months. Alex Hammerstone, director at Trusted Sec, is with us. What about these names? I know under a bit of pressure today, but tell me a little bit about the state of cybersecurity as AI gets more and more advanced.
So cybersecurity is going to continue to grow. Anybody that watches the news sees, all these attacks and breaches and organizations being affected. Not just that, it's that the whole landscape has kind of changed. Over the years, it's gone from talk about breaches and loss of records to really availability. And so we see large organizations losing millions of dollars due to their assembly lines being down or their resources being unavailable. And the other thing is that the number of targets keeps increasing, right? I mean, everything is being connected. And so the market is just going to continue to grow. And, these well-known, kind of bigger names, I think are going to continue to benefit from it.
Yeah, understood. I mean, right now, today, CrowdStrike is one of the names under pressure. When these names pull back, are those buying opportunities?
In my view, yes. I don't have a crystal ball, but I don't think anyone will ever be, go wrong, thinking the market will continue to grow. Obviously for any individual company, there are a lot of different factors that are going to affect its value. But I think, anyone that's ever been involved in a purchasing decision at a larger company knows that going with known quantities, going with big names, is oftentimes the way they're going to go, because there's less risk to the decision maker in those cases.
What would you say is a forte of one over the other? Because we put them in this category sort of all together, but they do compete against one another. Is one more of a standout in your mind?
So they're obviously all respected names. I've always been a big fan of Palo Alto's platformization kind of concept that we've talked about here before, and seeing that grow. And I think, the way to think about that is, for anybody watching that isn't necessarily in IT, is with kind of your home automation type items. You want your speakers and your locks and your thermostat to all kind of be on the same platform and work together, because it's much easier. And with any of these, security products, organizations don't just think about the product themselves, but also what it takes to maintain them and implement them and everything like that. So, that type of platformization, I think, can be very effective. But you also have, the CrowdStrikes and the Zscalers that are continuing to, expand, their offerings, kind of dial in on, what the technology is doing. Really focus not just on the perimeter of an organization, but also look at, securing users, devices, apps, et cetera. And I think that as they continue to move forward, that's going to continue to grow.
Right, understood. When you look at the fact that these stocks are near highs, and we think about all the geopolitical tensions, you still see that people are going to be running to these, right?
Absolutely. I think, kind of news stories are really one of the best drivers of a lot of these, cybersecurity companies. And again, I think it's that piece, right? There are more threats, but also the attack surface is just much bigger as more and more companies put more and more things online. And it's going to just continue to grow. As I said, I don't have a crystal ball, but I don't think you'll ever be wrong thinking that more things will be connected in the future.
And then what's your takeaway here about the potential for the downside? What is the downside for this group?
I think there's always the chance of new companies coming in and doing something innovative, although it is tough, I think, to get a foothold kind of in this day and age, against some of the larger players. But I think, the other thing is that the environment can change. Somebody might come out with a new technology that makes things safer in a way that we didn't anticipate, right? So some of these companies that are kind of out there protecting, may be affected there. But I think in the short term, I think we're going to continue, again, to see a larger number of threats and more organizations really looking to known quantities as a way to, lower risk and be in a better spot.
You talked about Zscaler having a great quarter, being driven by the shift to zero trust and cloud native security. Tell me more about that sort of mentality.
I think it's interesting. If you look at organizations, they've really changed over the years, right? From having these, large on-prem instances, a lot of equipment and things like that, and things are really moving into the cloud. And, in the old days, there was a lot of focus on kind of protecting the walls, right? The perimeter. And now there's a lot more focus on also looking at these end user devices, and applications and everything else. And so as you continue to focus on that, organizations that are looking at those things are going to be in a good spot. The other thing is, we hear a lot about AI, right? You can't turn on the TV or open a newspaper and not see AI. And I think for anybody watching, it's really important to kind of understand what AI is and isn't. And whenever someone uses that term, to really kind of understand what they mean by it and how they're using it. And I think that, when you look at these organizations, there's a large opportunity, because the things that AI does well and makes more efficient can very much fit well with their missions.
When we look at these names here, and obviously an incredible run, but you talked about 5 years ago, companies were just happy to throw money at cybersecurity. Sometimes they would have duplicative tools. At this point now, they're looking for more and more results. And organizations obviously are at risk. And at the same time, they have to spend to get upgraded, to get the latest tools, to make sure that they don't have breaches and all kinds of fines and things like that. Will there be the CapEx spending or the spending that we need on this particular part of life for companies. Do you have any sort of projections? Will we see double spent on cybersecurity over the next 10 years or something like that?
I will say I think it'll continue to increase. As I kind of mentioned, it's years ago, companies were just kind of happy to throw money at the problem, right? They were happy to buy a bunch of different tools and a bunch of different services, and they would end up with things that maybe they had two tools that could do the same thing, or they weren't taking full advantage. I think at this point, companies are really getting more focused on the outcome, right? So they want these tools or these services to provide actual results. They want measurable lowered risk when they can get it. And so I think that's going to whether cybersecurity spending overall goes up, I do think it will continue to be more concentrated in fewer companies.
All right. Thank you so much. Alex Hammerstone, great to chat with you. An important topic. People love to talk about cybersecurity at Trusted Sect. Thank you.
Everyone, and welcome back to another video for today. So in today's video, I do want to touch on 4, maybe even 5 cybersecurity names. You might not have known, but ransomware attacks blocked by Zscaler Cloud rose 146%. This is the sharpest spike observed in the past 3 years. Public extortion cases jumped by 70% based on data leak site analysis. Data exfiltration volumes have increased 92%, and manufacturing, technology, and healthcare were the top targeted industries, and the oil and gas sector experienced a 935% increase in attacks. If we look here at the top 15 countries based on share of ransomware attacks, you can clearly see that the United States sits at 50.8%. Now in this video, we're going to talk about Palo Alto Networks, which is the giant with the firewalls and cloud security, CrowdStrike, they excel in endpoint protection and threat intelligence, Zscaler, SentinelOne, and Fortinet as well. And so let's start off with Palo Alto Networks. That's the one that just reported their quarterly figures. Stock is up 4.7% on a Tuesday when filming this video. This is a company worth $117.6 billion. As you can clearly see, over the past 5 years, this is a stock that has done quite well. It's up 301%. And year to date, it's now up 2.1%. Cybersecurity stocks, believe it or not, have not been performing that well. Some have, but a lot of them did not perform very well. Most of them are very, very expensive. If we purely look here at trailing PE, EV to sales, EV to EBITDA, or even forward, right? Forward PE, price earnings to growth, most of the cybersecurity names are extremely expensive. Now, most of them are also expected to grow nicely over the next couple of years, whether it's revenue or EPS, but it does seem like the market is putting a pretty high premium on cybersecurity names right now. So let's talk about all of those names in this video. If you enjoy this type of videos, hit the buttons, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. And also special thanks here to Fiscal.ai for sponsoring this video. Fiscal.ai, previously FinChat, is of course a stock research platform that you've seen on this channel time and time again. And especially during earnings season, this is an extremely useful one, because as you've just seen, I went to view transcript. We have here the full transcript of the earnings call, the earnings report as well, and the presentation. Some companies have presentations, some others don't, but here you don't even have to go to the company's investor relation website. You get it all right here. And then of course, our trusty AI summary. So for the quarter, revenue increased 16% year over year. Their fiscal year 25 did end. So for fiscal year 25, revenue increased 15% to $9.2 billion. Next generation security ARR grew 32% year over year to $5.6 billion. And RPO, remaining performance obligation, did grow much, much faster than revenue, 24% growth to $15.8 billion. If you remember, a year or so ago, they switched strategy to a more platform style, something that CrowdStrike has been doing for quite a while. They said that the company platformization strategy is resonating with customers who are seeking integrated security solutions. This is evident in the strong growth of next generation security ARR. If you're not aware, Palo Alto is also going to acquire CyberArk, another company, for about 22 billion. I think it's $20 billion. And here on fiscal.ai, you can actually ask specific questions. So what did they say about CyberArk? And they're going to go through all of the transcript, all the reports to see if they mentioned anything about the acquisition. And of course, they did. So they believe, Palo Alto believe, the identity market is at an inflection point due to the rise of agentic AI and mass AI adoption. They believe that identity security will be crucial in the coming years. CyberArk's reach extends to over 8 million privileged end users and over 50% of Fortune 500. Palo Alto believes it can deepen CyberArk's PAM penetration and target a large base of global IAM users and machine identities. They also see quite a lot of upside, so Palo Alto believes the acquisition will accelerate its mission to double the value of the joint businesses over the next 5 years. Palo Alto is also targeting adjusted free cash flow of over 40% for the combined company in fiscal 28. So that's about 2 fiscal years from now for Palo Alto. Now, if you look at how Palo Alto generates revenue, again, this is all powered by fiscal.ai. If you use my link, you'll get 15% off. New users will get Fiscal Pro for free for 2 weeks. So you can try it out. No commitment necessary. And I do want to thank everyone that has been using my links. I really, really appreciate that. So as you can see, total revenue did accelerate over the last couple of quarters. The majority of the revenue does come from subscription revenue. Then we've got support and product revenue. All in all, we've also seen that remaining performance obligation did accelerate quite a lot in this quarter, up 24.4% year over year. Then looking at gross profit margin and free cash flow margin. Gross profit margin, this is in the last 12 months, so we get a bit of a better picture. And this is not including the most recent quarter, because unfortunately, it does take a day or two until we get the updated numbers when it comes to gross margin, free cash flow margin. For key performance indicators, these are usually updated 15 to 30 minutes after the company reports, but it's about the same number right now, 73.6%, free cash flow margin 33.8%, and as they said, they target above 40% adjusted free cash flow margin for fiscal 2028. Looking at operating margin, that has been stable at around 11.2% for the last couple of quarters. Then for this quarter, as you can see, revenue came in better than expected. Remaining performance obligation also better than expected. Next gen security ARR better than expected. And the same here for diluted earnings per share, growing 27% year over year. As you can see, they are targeting above 40% free cash flow margin for the combined company in fiscal 28. The acquisition of CyberArk is expected to close in the second half of fiscal 2026. And this is the guidance that they are giving us for Q1 fiscal 26, which is next quarter for them, and fiscal year 2026 as well. So you can clearly see that, well, next-gen security ARR is growing much, much faster than total revenue, but that's great. Remaining performance obligations still expected to grow 23%.
Why don't you own apartment buildings? Seriously, why don't you own these big apartment
year over year? So definitely they're seeing a lot of traction. We're already seeing here adjusted free cash flow margin between 38 to 39% for fiscal 2026. And if we go back to the last 12 months, well, that's of course much lower than that. Moving on to the next one, that's SentinelOne, much, much smaller of a company worth $5.6 billion. Performance-wise has been horrible over the last 3 years, over the last 12 months as well, and year to date, same thing right here. Again, this is a much smaller company compared to all the others that we're going to cover in this video. Here as well, if you look at the forward PE, still very, very expensive. And you would say that, well, this is a company that should be growing much, much faster because it is smaller here as well. And it's also a company that should have maybe taken advantage from the CrowdStrike fiasco a year ago. But what we've seen with CrowdStrike, and we're going to talk about that in a second, is that when CrowdStrike is just such an amazing platform that even such a huge fiasco last year couldn't really stop the company from growing that fast and didn't really help SentinelOne that much. But that said, SentinelOne is still expected to grow fast, I would say, in the next coming fiscal years, including fiscal 26. We actually see small acceleration in growth in fiscal 27, gross profit margin that has been improving quarter after quarter, and the same thing can be said here with free cash flow margin. Of course, as you can see, in Q1, they're yet to report their next quarterly figures, 5% for the last 12 months. We're talking here about over 30% for the likes of Palo Alto, and you will see with the others, it's up there as well. So there's still a long, long way to go with regards to SentinelOne. Profitability-wise also, still a long, long way to go. Operating margin for this company is negative 38.4%. But right now, since this is still a young company, all things considered, still very small, maybe we should give them a little bit more time, because right now, if you look here at customers with over $100,000 in ARR, that's still growing above 20% consistently quarter after quarter. If you look at annualized recurring revenue, that's also still growing above 20%, although the growth rates have, of course, come down. So you don't want to see this continue to go down until it hits single digits, but this is still a fast-growing company. RPO over the last 2 quarters have seen an acceleration in growth. So October quarter of 2024, that increased 25%, then 30.5%, and the last quarter was 33%. Let's see what happens in the upcoming quarter, because this is definitely a very, very good trend after seeing these trends right here. Now, of course, what you want to see from a company like SentinelOne is them continue to grow quite quickly for many, many years to come. Them showing us maybe big wins in the upcoming quarters. Because yes, the cybersecurity space is definitely growing. It's a highly, highly competitive space, right? We're basically talking about 5 players here. Of course, not all of the 5 do compete directly one with each other. Sentinel and CrowdStrike, yes, you might say that they're competing one with each other here. Palo Alto Networks here as well. But it's such a big market that is growing so fast. You would think that a company of this size, which is SentinelOne, that they would capitalize on that momentum. That's the problem right now. That's also why the stock has gone down so much. But maybe that's an opportunity. Maybe that's an opportunity right now for long-term investors. Moving on to arguably one of the highest quality names in the cybersecurity space, and also one of the most expensive ones, and that's CrowdStrike. CrowdStrike has performed very well over the last 5 years. Over the past 3 years, it's up 121%, and year to date, it's up 20.3%. And here as well, you can see a small drawdown here of 18% since the peak this year. This is a company worth $106 billion. Now, here as well, like I said, super, super high premium from the market. This is a company that has been growing fast and still expected to grow fast in the future. Now, again, not just because I'm making this video right now, of course, does not mean that you have to jump in those names the day after or an hour after that. No, I'm just here to provide some information about those companies. I do think that those companies are definitely quality ones, but even with great companies, like I said, with the trade desk, there is a correct price to pay for all of it. And if we're looking at CrowdStrike, super high quality business, but here as well, you can see that total revenue still growing nicely, right? But growth has been decelerating quarter after quarter for quite a long time. Now, they did tell us the following thing. For Q2 expectations, the company's CFO stated that they expect the sequential net new annual recurring revenue growth rate in Q2 to be at least double what it was in the same period last fiscal year. This signals a positive shift and an anticipated reacceleration of growth. Management expressed strong conviction in a reacceleration of net new ARR in the second half of fiscal 26. This confidence is based on the success of the Falcon Flex model, new product momentum, and strategic realignment plan. So, of course, we are seeing this. For us to be maybe more comfortable paying that premium, we should be seeing a little acceleration or reacceleration in growth in Q2 and in the second half of their fiscal year.
1 spoonful of honey with cinnamon before bed equals 0 memory collapse. The secret the billion-dollar industry doesn't want you to know. If you struggle with memory lapses, confusion, or brain fog, pay close attention. You need to see this. This could change your life the way it changed mine. I'm a woman who broke free from dementia. And no, it wasn't from heavy medications or crossword puzzles. It was the opposite. I got access to a report that was taken offline under industry pressure. It described a Harvard PhD neuroscientist who helped patients with early forgetfulness regain sharp mental focus. The report explained how he did it naturally, using a simple honey-based recipe. All I did was follow the 3 steps he taught. I took this mixture once a day, every night before bed. In 4 weeks, my memory was like an elephant's. I started remembering where I left my keys, names.
Now, that said, RPO still growing 44.7%. Annual recurring revenue still growing 21.6%. Margin-wise, gross profit margin, we've been around 74-75% for quite a long time. Free cash flow margin did start to drop a little bit. We do have some negative impact from what has happened last year here as well, but that should definitely, well, the trend should definitely recover moving forward. And then operating margin, as you've seen previously with the trailing PE and all of that, well, operating margin is negative 4.4%. Yes, even here with a company worth $100 billion. And that's why I keep saying great companies, that's fine. But even with great companies, sometimes the stock can go up for a long period of time, but there will come a moment where the market will be like, you know what, maybe it's time for a 50% haircut. And that's when you should be ready to act accordingly. I'm not saying that CrowdStrike will experience a 50% haircut, but a company like this cannot continue to be not profitable. Of course, it still generates free cash flow, which some might say is way more important than just earnings. I could make the case for both of it. But CrowdStrike, it's a company that has always traded at a high premium. But there will come a time where the market will probably say, you know what, great company and all, but seeing how, well, there are maybe some better opportunities out there in the market, maybe it's time to lower the prices, right? Maybe it's time to lower the prices, especially if the market is not happy with the reacceleration in growth. Maybe they will show reacceleration, but it might not be enough. Just like we've seen with the trade desk. It was a very good quarter, just not enough to justify the price. Moving on to the next company, and that's Fortinet. Fortinet is a company worth $61.8 billion, and here you're not really paying such a high premium compared to all the others. Trailing PE 31.5, forward PE 30.6, margin-wise, very, very good. Okay, very, very good. I know it's not a sexy name like a Palo Alto or a CrowdStrike or even a SentinelOne, but Fortinet, despite the stock, well, still being up 206% over the past 5 years, over the past 3 years, 54%, over the past 12 months, only up 4.3%, and year to date, still down 17.7%. That happened, well, more recently, as you can see, their reported earnings was a good quarter, Market was just not happy with the guidance, with the expected growth. But as you will see, again, good quarter, all in all, growth, good commentary across the board, as you can see right here. And they even raised full year 2025 billings guidance midpoint by $100 million. Might not be much, but it's better than nothing, right? It's better than nothing. With all that said, Fortinet, in my opinion, deserves a little bit more credit. Yes, revenue growth might not be above 20%, but we're still close to 15%. If we look at free cash flow growth, for example, for the last 12 months, 29.2%. For fiscal 25, that's only expected to be 6.3% year-over-year growth, but then above 14% year-over-year growth in free cash flow for the next 2 fiscal years. That's quite good. Remaining performance obligations is, of course, not growing as fast as the others, but here we've also seen a slight acceleration in growth, growing 12.2% last quarter. Total billings, this one has also seen a nice reacceleration in growth for the last 1, 2, 3, 4, 5 quarters right now. Let's see what happens in the next one. As for margins, I mean, the price that you're paying for Fortinet for gross profit margins here of around 80%, operating margin and free cash flow margin pretty close one to each other, 30 to 32%. I mean, we've just seen all the others. We've just seen the price that you're paying for all the others. Of course, you're paying a little bit more because they're growing faster, but this is a profitable company, right? This is a company that is still growing, that has high margins, and it is profitable. And yet you get the chance to buy this stock at a cheaper valuation than, maybe even a Zscaler, for example. But we'll touch on the Zscaler as a bonus pick in a bit. But yeah, Fortinet. Fortinet, in my opinion, is one of those forgotten names in the cybersecurity space because it's not as sexy as a CrowdStrike, SentinelOne, or Palo Alto Networks. Moving on to the last one and the bonus pick here, Zscaler. So Zscaler is up 115% over the past 5 years. This is a company worth $43 billion. As you can see, PE for the last 12 months, non-existent. PE for the next 12 months, 79.5%. This is a company that, of course, has been growing quite rapidly and still expected to grow fast over the next 2 fiscal years. EPS, not that much. Now, as you can see here, margin-wise, gross profit margin 77.5%, free cash flow margin 30.3%. But if we look at net operating and EBITDA, still negative over the last 12 months. Now, if we go and look at what has happened last quarter, which they reported May 29th, revenue increased 23% year over year, calculated billings increased 25% year over year, deferred revenue increased 26% year over year, cash provided by operations was $211.1 million or 31% of revenue.
Why are you not investing in tax liens? No, seriously. Why are you not investing into one?
Customers with ARR of equal to or above $100,000 increased 15.1% year over year. And here as well, the trend continues just like all the others. It's going down. So growth is decelerating here. Same here with customers with ARR of above or equal to $1 million, but that's growing much faster. That's up 22.8% year over year. Gross profit margin here still around 77, like we've seen, $76 has come down a little bit. Free cash flow margin of 30.3%, that has been increasing actually over the past couple of years. Operating margin is improving, but we're still negative at the moment. Last thing here, and that's remaining performance obligation, that did increase 30.2% last quarter, and this as well has been re-accelerating. So that's great, and that's something that we've seen with a lot of these players, right? Revenue coming in at X%, remaining performance obligation does grow a little bit faster than that and has seen a little acceleration as well, again, indicating that there is quite a lot of momentum in this industry. But do you want to pay a premium for these names for the sake of having exposure to cybersecurity? Because I've been getting a lot of questions. Why don't you own any cybersecurity name in your portfolio? And the answer is purely, yeah, because it is expensive, and personally, I don't need it. I will probably get it next year when Google completes the acquisition of Wiz, right? Wiz is also cybersecurity in the cloud, so it might not be competing with those players, but that would be, for example, my exposure. By the way, if you own Microsoft, you're also having exposure to cybersecurity because Microsoft's cybersecurity, well, side of the business is already quite a big one. So yeah, that's basically it. It's very, very interesting companies, but you have to pay up to own them. Let me know if that's worth it down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.
All right, Couch Investor, thank you for that. So I've gone ahead. If you want this workbook, practically it contains a list of all the cybersecurity companies that I'm interested in, and so I've highlighted a couple: the Escalar, Sentinel, Netscope. This is CISO Global, as well as I think I have one more Fortnite up here, and then also CyberArk. I've highlighted a couple of them so just because I think it's probably, if I'm going to invest in one of these companies, it's good to know the overall picture and how many, where the competition is and what is the size of these companies. Right now, from what I see, there's some that are large. Let me get a table so I can create a filter. Let me filter by market cap and see A through Z, and just kind of look at the largest by market cap, at least for the data that I have. So I have here, that's about 6. That's not a good filter. A through Z. 11 billion, 37 billion. So it's the smallest to largest and largest to smallest. Okay. So 6 billion, 4 billion. This filter is definitely not working as I want it to. 2 billion, 11 billion. So filter isn't working as I want it to, but as you can see, you're able to see the charts and how well these cyber companies have been performing for the past 30 days. I can change this number easily, and let's say the past 90 days, match it up with, let's see how the chart has been doing as well for the past 90 days, comparing the two. You're able to see that how the performance is going. So the past 90 days, especially for the ones that I'm interested in here, CyberArk, it's been up and to the right. So the stock has been doing really nice today. Went up $2. So just a day change, about 0.43%. The stock is about $500 a share. The past 90 days, it's done about 20%. So that's been doing pretty good. We have CSCO Global, CISO or CISO Global, down today about $1. It's a $1 a share stock. Is gone. It's kind of been flat the past 90 days. Hasn't really been moving much. 13% is not something in the past 90 days. Isn't something that's terrible, but it's just been kind of flat, not really moving that much. The other one that I'm interested in here is this Fortnite. It looks like the stock kind of took a hit here, 15% down from the high. Today it's been about 0.7% movement. That's up 58%, $85 share, $65 billion market cap. So not small. The reason I like to look at the market cap of the company is just so I know, all right, is this a BS, $5 million stock market cap company where still it needs to get filtered out or doesn't have a good business? So I can quickly just look right past those. It takes a lot to get to, a $65 billion market cap. So we're seeing a 0.7% move today, and then definitely the stock has been beat. Maybe this is an opportunity to start, looking at them. The next one is Sentinel. Sentinel is a pretty good business here. Well known in the cybersecurity world. Up $17 stock, 5.8, almost $6 billion market cap. About 0.3 move today. Overall, in the past 90 days, it looks like it's down about 6%. The stock has been flat, down 6%. It's been about flat, hasn't been doing much. Past 180 days, let's see, half a year. Half a year. So past 180 days, Sentinel has been, flat, like I was saying. Hasn't really been doing too much. Netscape, is that Netscope? I think, probably Netscope. This is about $9 billion market cap company. Still, micro cap, pretty small. It's not getting me the 180-day performance, but you can see the stock has been kind of flat, down 2%, 69 cents down today. Those are the main ones that I'm interested in. If you're interested in this workbook, let me know. I was able to go get it, a lot of these companies from the ETF list. So I went and found all the ETFs that are out there that specifically focus around cybersecurity, and I got all the individual stocks within the cybersecurity. So yeah, so if you're interested, let me know. I don't mind sharing this with anybody that's interested in the sheet. So let's go on and look at the next one. Thank you, Couch Investor. That was a good analysis. Perkiv, he's a pretty good analyst as well. He talks slow just like me. I'll speed up his talking speech to about 1.5 and slow it down from there. He's going to be covering the best cybersecurity stocks to buy. Obviously, this video is a bit aged, 3 months, but there might be some nuggets you can pick up.
The cybersecurity industry has been one of my favorite industries to recommend to investors. I've liked the competitive dynamics, the need from buyers, the increased regulatory scrutiny forcing publicly traded companies to adopt better cybersecurity.
Okay, buddy. He could back up a little bit. A little too close.
Security measures all has led to attractive situations for cybersecurity stock investors. But which one is the best cybersecurity stock to buy? Well, I'm going to compare 5 of them here in this video: SentinelOne, Palo Alto Networks, CrowdStrike, Fortinet, and Okta. I'm going to look at their revenue growth, their returns on invested capital, and then I'm going to share with you my proprietary discounted cash flow valuations for each 5 of these companies. And then we'll also look at valuation on a forward price to earnings basis, and then come to the conclusion on which one I think is the best cybersecurity stock to buy right now for long-term investors. Let's dive in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parquet. Revenue chart here. A couple of things stand out to me. Number one, Palo Alto Networks is the clear leader in terms of total revenue generated at $8.9 billion in the most recently updated trailing 12-month period. Second place is Fortinet at $6.1 billion. Then you have CrowdStrike at $4.1 billion, followed by Okta at $2.7 billion, and the smallest of them all, SentinelOne, at $900 million on a
Subscribe is how you stop it.
I have to refresh that. For some reason, the screen went kind of gray, so let's see if we can continue.
The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So let's start with the revenue, okay? And looking at the revenue chart here, a couple of things stand out to me. Number one, Palo Alto Networks is the clear leader in terms of total revenue generated at $8.9 billion in the most recently updated trailing 12-month period. Second place is Fortinet at $6.1 billion. Then you have CrowdStrike at $4.1 billion, followed by Okta at $2.7 billion, and the smallest of them all, SentinelOne, at $900 million on a trailing 12-month period. So you have big differences in total revenue for these companies. But I also want to look at growth. And when we look at the descriptions below here, we get the compounded annual growth rates for these 5 companies. Palo Alto Networks demonstrated 23.7% compounded annual revenue growth between 2019 and 2025. Meanwhile, SentinelOne generated an important and impressive 74.5% growth in that same time, CrowdStrike at 51%, Fortinet at 22%, and Okta at 34%. Notably, these are all impressive revenue growth rates between these time periods, okay? This, of course, included the time period during the COVID-19 pandemic, the lockdowns, the economic reopening, the inflationary surge, and all of those headwinds and tailwinds that were experienced during that time. Very few industries have demonstrated this kind of consistent growth in this time period, right? There's been more volatility in other industries. Cybersecurity has been one of the relatively strong performers, both going into and coming out of the pandemic. The next thing I wanted to compare these companies on is their returns on investor capital, or returns on invested capital, I should say. And a couple of things stand out to me here as well. Number one is Fortinet has the best in class return on invested capital at 23%, and that's up from around 18.5% in 2021. So Fortinet has the best number and is also demonstrating positive growth. Those are 2 good signs for Fortinet. Another thing I see is SentinelOne is the worst in terms of the return on invested capital, the actual number. But the trend, it's improving nicely for SentinelOne, all except this most recent trailing 12-month period. The company had demonstrated nice improvement from negative 96% all the way to negative 20%. And then in the most recent trailing 12-month period, that trend line reversed. That's an unattractive feature there. The company having the worst number is understandable, given that it also is generating the lowest total revenue figures. It's also generating the best revenue growth. So if the company continues growing revenue at the rates it's been growing revenue, in a few years' time, I wouldn't be surprised if these numbers turn positive. The cybersecurity industry is an attractive industry in terms of profitability. The next thing to note here is Okta is demonstrating improvement, going from negative 17% in 2021 all the way up to positive 0.2% in the most recent period. So excellent growth there for Okta turning positive. Okay, CrowdStrike A bit of a mixed result here. CrowdStrike was negative 12% in 2021, had improved to 0.4% before declining to negative 7.2% in the most recent trailing 12-month period. Of course, one of the bigger headwinds for CrowdStrike was that massive outage that it caused and the ensuing costs and headwinds it had to face as a result of those outages. So those were headwinds, and we're starting to see those headwinds playing out here in the company's figures. Palo Alto Networks, interesting developments for them as well, going from negative 4.1% all the way to 13.3% before declining back down to 4.7% in the most recent trailing 12-month period. The headwind for Palo Alto's margins is a change in strategy. I reported on this, I believe it was a year and a half, maybe 2 years ago, when Palo Alto Networks told investors they were going to take a different strategy to try and gain market share. What they were going to do is tell all of their potential clients to join them. And if they had an existing contract with another cybersecurity provider, they wouldn't have to pay Palo Alto Networks as long as they were paying the other provider. So, for example, if let's say a client was interested in joining Palo Alto Networks, but they had an 8-month contract left with another provider, Palo Alto Networks would tell that customer, you don't have to pay us for 8 months. So you can join us. We will provide you the services. You can be onboarded completely. You won't have to pay us for 8 months. Okay. So that strategy has worked for Palo Alto Networks attracting customers, thankfully, but it's also hurt its margins because it's providing those services without generating revenue in return for those services. I expect this will turn around for Palo Alto Networks as well in the long term. By the way, I'm getting these cool charts from fiscal.ai. There's a link in the description for their services. You get a discount if you use my affiliate link to join their service. All right, so now let's start with valuation. And I'm going to look at the forward price to earnings ratio to value these cybersecurity companies. The most expensive here is CrowdStrike at a forward PE of 123. Then you have SentinelOne at a forward PE of 75, followed by Palo Alto Networks at 54, Fortinet at 41, and Okta is the cheapest at a forward PE of 28. But I also like to look at valuation using my proprietary discounted cash flow metric. And according to this calculation, let's start with Fortinet stock here. The intrinsic value for Fortinet I calculated is $95. The current market price is $103. So Fortinet looks fairly valued according to my DCF calculation. The next one here is Okta, and my intrinsic value calculation is for $156, and the current market price is $91. So Okta stock looks undervalued significantly according to my calculations. Then we have SentinelOne, which I calculated a intrinsic value per share for the business at $42, current market price at $18. So SentinelOne looks significantly undervalued as well according to my DCF calculation. We move on to CrowdStrike, where I calculated an intrinsic value per share of $280. The current market price is $470, so CrowdStrike looks overvalued.
Hello, my name is Adam Ferrari, the Chief Executive Officer of Phoenix Energy. I look forward.
And last but not least, Palo Alto Networks, the intrinsic value at $128, current market price of $192. Palo Alto Network stock also looks overvalued according to my proprietary discounted cash flow valuation. But when I looked at the forward PE multiple, Palo Alto Network stock looked fairly valued. So I get a mixed figure on valuation with Palo Alto Networks, but with CrowdStrike, I get two confirmations and two metrics that point to the stock being overvalued. In fact, out of all of these 5 companies I reviewed today, CrowdStrike is the only one of the cybersecurity stocks that I do not have rated as a buy. The other 4 I do have rated as a buy in my investing spreadsheet. So if I were to pick one of these 5 to buy today, which one would be my top cybersecurity stock to buy right now? I'm going to go with Okta. Okta has done a good job in generating revenue growth, right? We looked at its revenue growth at a compounded annual growth rate of 34% since 2019. That's excellent revenue growth, combined with a solid trendline improvement in its return on invested capital from negative 17% to 0.2%. It's the only one of the companies that's demonstrated consistent improvement in this metric. The others have had ups and downs. Okta has been straight improvement, even though the actual number is not as good as Fortinet's, it is demonstrating a solid straight line improvement, which I do appreciate. And then valuation, Okta is trading at the cheapest forward PE multiple at 28. And then when I calculated the valuation on my proprietary framework, it also looked undervalued by a significant margin. So all things point me to rating Okta as the best of these 5 cybersecurity stocks to buy right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more stock, and this framework provides you the thing.
All right, so he thinks that Okta, check it out, is the buy here. I do have Okta in green. That is a company that I'm interested in. It is beat up, definitely, in the past half a year. Okta is down 20%. Let's just take a look at Okta real quick. Okta finances, how's it doing revenue wise? As you can see, this is a company that is growing pretty quickly so far. As of January, from January till now, looks like they've done about $2 billion. All this is obviously in millions. So they went from $835 million back in 2021. Obviously, AI and everything else started to grow. And when you have AI, Okta really does, like if you're going to be developing any kind of AI as a startup, Okta is going to be like one of the first places, one of the first ways that you're going to, one of the, I guess, security systems that you're going to use to start creating your agents and your AI product. Looks like they have cost of revenue that went up, but this isn't even that significant compared to how quickly that their revenue is growing. So even though revenue is growing, 20, almost you can say average this at about what, almost 30% revenue growth, CAGR. You're seeing their cost of revenue isn't going up too fast. Selling general administration, I mean, this hit, I mean, a lot. I mean, this is a lot of money here. Selling general administration has really gone up here. Is an operation expense. It involves various company expenses that are not related to the production. Research and development, obviously, this is always going to be high. As a tech company, they're going to have to, test their environment and everything else. Here's their actual operating expense. As you can see, it's just been kind of sitting flat here between 2024. Between these 2023 and 2024, it did go up, but not by a lot. But still, overall, their selling general administration expenses is in the $2 billion mark. So that is a lot of money when it comes to their operating expense. Operating income, this company was losing $204 million a year, 700, 400, and then so far, January 31st, 2025 till now, they're at about loss of about $63 million, which isn't bad. They've, as you can see from this date on, their operating loss has been less and less and less. And obviously AI is still taking off. So overall, I think they're going to continue to make sales and this operating expense is going to get better. But this operating income is going to get better, but they're going to have to watch out for this operating expense that is really eating away on their income. The general administration expense, they also have to watch out for. That is quite scary. Then at the end of the day, that's going to come and impact their net income. Overall, the company is losing less and less money, which is a positive sign, especially starting 2022. They've been able to lose less money as a company overall. Going into their balance sheet, let's see how they look from quick ratio, which means their current assets, current liabilities, long-term assets, and long-term liabilities. So to compare the current assets and current liabilities, so here they have in 2021 they had more current assets than they do liabilities. Same thing in 22, same thing in 23. So overall, the company is not only relying on liabilities, taking on debt to grow the company, they have enough assets to cover any short-term liabilities. So that is a really good and healthy way to grow a company. They are quite small still, so it's good to see that they're not relying only on liabilities to finance some of the things that they do. Long-term assets, total liabilities, it looks like they still have grown. The total assets is a lot higher than total liabilities. So from a balance sheet perspective, the company is healthy, and it's good to see. From an income statement perspective, there's a couple of things that are worrying. That is their general administration and operating expense. these two numbers really eat away at their net income margin. And if they can find a way to reduce this general administration, I'm sure this probably has, marketing expense and everything else, but it looks like it's peaked, right? In 2023, 22, it was quite low, 21 was quite low, but then in these 23, 24, it's kind of seen that peak. Trailing 12 month, they may just end up peaking at the same 1.4, 1.5 billion dollars. But as long as maybe there's this consistent general administration expense, that might not be bad. It would be good to see, the breakdown of where this expense is going. Their operating expense, I don't know what kind of operational expense where their money is going, but this number here needs to kind of cool down a little bit. And it's kind of all over the place, as you can see, 1.6, 2.1, 2.14, and then once again going back down since January, but trailing 12 months is at about $2.2 billion, or almost $2.1 billion. So that is the main thing that investors are going to be worried about, is saying, what, their balance sheet is not, their income statement is not the best from their operating general administration expense perspective. But when it comes to net income, we are seeing that the company is losing less and less money throughout the years. So that is definitely a good trajectory that they can go in. As soon as they see, a good impact on these, that is going to trickle down to the bottom line, and it's going to be a good sign for the company. Shares outstanding, they're issuing shares right and left. I mean, they started with 127, and they haven't stopped issuing the number of shares. So 127, 148, 158, they added about 10 million extra shares out there. They could have done it for any reason. They could have been raising money for additional, general administration, research and development, whatever they were doing it for. But looks like they issued additional shares here, and that is never good for shareholders, as that reduces the total pie any shareholder has. So overall, it's normal for a smaller company to do this, so not really too worried. They are still small, they're not that big. But Max, when we zoom out, this is a company that was 2017, maybe that's a little aged. In 2019, right before COVID, this was a company that was sitting at about 100 and in the hundreds about. And then they exploded going into 21, COVID and all that. They hit about $283 at the height, and then they just dumped here. I don't know what made the company fail like this, but it's got to be some kind of news, maybe management. Usually when there's a new management that comes in, or business strategic changes, or their system goes down or gets hacked, obviously this might be what happened. Okta, keep saying Okta. What happened to Okta in, what's that year, 2021 October 2021. I see the stock price declined sharp. Let's see what happened. It could be due to, in October, Okta stock declined sharply due to the concerns over widening losses despite strong revenue growth. The company reported a significant increase in operation expense, which led to the much larger operating loss. Operating loss, despite revenue growth, their losses jumped from $45 million to $263 million. EPS declined, so they missed. Okay, so when they reported their earnings, they missed that. Market reaction, so the stock went down by 7% in 2021, 10% over the month, dropping from around 260 to 203. Strategic context, Okta was in the midst of integrating its Authentication O1, a major acquisition aimed at expanding its identity platform. I've actually used this before when I was creating an an AI application before. Integration costs and uncertainty around this synergy realization added to investor anxiety. So of course, like I said, it's not new management, but maybe there was some kind of, that authentication zero might have caused this decline back in 2021. But it's overall, the stock is up 276%. The past 5 years they got hammered at 59, almost 60% in the past 5 years. This is a stock that was $288, meaning I think the business is still intact, but then they've just been spending a lot of money just trying to get it back to where it was. This year, cybersecurity stocks have done really well. Looks like Okta kind of is lagging behind. They are about a 23% year to date, 13% in the past month. They are definitely down. They're still small. I mean, $15 billion is not that big of a company. A little bit above the micro cap company. So the forecast is saying that that the stock is still unpriced. Analysts are saying it's underpriced by 36%, so it's still got high potential. The 38 analysts that cover Okta stock have consensus rating of a buy, an average price of about $122, which forecasts a 36% increase from the current price in the next 12 months from today. So as you can see, the number of strong buys has gone up throughout the months. In September declined a little bit. In October is also just stayed consistent. The strong buys, then the buys have stayed consistent. The holds have stayed consistent. Maybe one analyst is saying sell, but overall the majority of consensus is a buy, which is good to see. We see that firm Baird, we have a 135, so this is a buy. It looks like this is a downgrade from 142 to 135. 111 buy. RBC Capital, BMO Capital, looks like they're also downgraded the stock, but overall there's still a huge upside from analyst perspective. So Okta might be a decent company to look at. They're expected to, by 2026, revenue is expected to grow about 17%, almost 18%, and then 19% going on from there. But when we looked at the company's overall revenue growth, we've seen that financials revenue growth, the company is growing revenue at a decent year-over-year growth rate. So most likely they're gonna hit those numbers. They're already at 15%, so they're gonna hit a lot of the analyst projections. Quarterly, they're hitting they're at about 18%, 11%, 16%, 12, almost 13% revenue growth quarter over quarter. This year, just looking at this year, Q1, they grew at 19%, 16%, 13%, and 12% revenue growth quarter over quarter. Gross profit is also, pretty positive. Operating income, they're finally hitting positive numbers. As you can see, they went from losing 40, 19, 16 now to a positive 19 operating income. Net income from a quarter-over-quarter perspective, as of 2025 Q2, they hit positive $29 million, then kind of fell off, and then we're back up again. Since April 30th to 2025, it looks like that's when they report. They're at a positive net income to common shareholders. They definitely didn't slow down in the number of shares that they offer. So Overall, the company is continuously issuing more and more shares, diluting the number of stocks and diluting shareholders. But it seems like, for a smaller company, they always seem to do this. There's a chance, they're paying out shareholders using stock-based compensation as well. Let's see. Let's check it out. Does the company pay using stock-based compensation? Yes, both Okta and Cyber Software SBC. So Okta stock-based compensation for fiscal year 2025 was $565 million, down from 600, which is down from 684 in 2024. Quarterly SBC ending Okta did a $272 million stock-based comp. So SBC as percent of revenue, with quarterly revenue of about 728 million, SBC accounts for about 37% of the revenue. Wow. So there you go. So they do stock-based compensation. So they're paying employees using their stock rather than just all cash. So, all right. That was a pretty good analysis of Okta. I think Okta is definitely one that I have in my peripheral. As you can see, this is one of the companies that I'm interested in, and I've highlighted green. Should have this green. All right. So, thank you so much for joining me. I think this is it for the night. Make sure you subscribe if you're still here. Leave a comment on this video with your favorite ticker symbol, and I'll definitely check it out. If you're interested in this table here with the list of most or all of the companies around cybersecurity, I'll definitely provide it. I can definitely share this with you. If you want me to cover any specific stock, make sure you leave in the comments and make sure you subscribe. Thank you so much for joining me today. I will talk to you tomorrow and I will be live. Have a great night. Peace.